What should I be investing in 2023? Hey, is there a recession coming? Chances are yes. Is it going to get tough? Yeah. Is there going to be pain? Absolutely. And the types of assets that you invest in has not changed, not in the last 20 years, not in the last 10 years, not in the last 5 years. We're still focusing on the same core types of assets, things with a good moat around them in the stock market that are paying us to own them, and real estate that is paying you more than what it costs to operate. These are cash flow assets. It's not going to change. It's going to be consistent throughout any downturn or upturn. You're going to still focus on cash flow assets. Nothing's changed for 2023 except that they're going to turn the pain up and there's going to be more opportunity. What would I do if I was wiped out and I had to start over all over again? I would do the exact same thing that I did to get started, right? I would work and I would transfer my assets. I'd make sure that I am living off of less than I make, and I would consistently invest in cash flow assets. It's really, really tough to fail when you consistently, over time, invest in things that pay you an increasing amount. There's very few types of assets that actually qualify, and I would make sure that I'm focusing in on those. And then I would work my tail off to acquire assets, not liabilities. Assets feed you, liabilities bleed you. I would avoid the liabilities and focus like a laser beam on buying assets. This is how I know the recession is coming, because the Fed wants there to be a recession, and they bat 1,000 whenever they're raising interest rates. They go high enough, they're going to cause things to break. You're going to see bank failures. You're going to see increased debt and people spending money that they don't have, which is going to cause them more pain because the interest rates are going up. You're going to see adjustable rate mortgages knocking people out of the commercial market, out of their homes, out of multifamily. You're going to see the increase in pain. We can look at the inverted bond yield, yeah, the 10-year versus the 3-month, or however measure you want to take. Yes, all the signs are there. We're headed into recession. But the recession just means for you is they're turning up the pain. And what that creates is opportunity for cash flow investors, because things that were really expensive and didn't cash flow all of a sudden are getting pushed into that realm where they're viable investments for you at that time. How do you minimize the impact of a recession on you and your family? Well, here's what you do. It actually doesn't change from day to day. Number one, we always want to keep an emergency fund. Number two, we only invest in assets, and assets are things that pay you, that cash flow. We never invest in liabilities and hope that they go up because you think, oh, in 3 or 4 years, they're going to be worth so much more. If you want to survive in a recessionary cycle, you make sure you have cash flow assets. You make sure you have enough liquid assets to carry you in the event that it is much more severe than we anticipate. You do that, you're going to be fine.